Good morning, traders. It's 27th October 2015, 8:32 a.m. IST. Welcome to Justfintech ProAMT Traders Digest. Let me go through the disclaimer first. Trading futures involves substantial risk of loss and not suitable for all investors. This video is for educational purpose only and not a recommendation to trade. Please consult your personal financial advisor or do your own research before taking any trades based on the levels discussed here. We are not responsible for any losses arising due to trades taken on the basis of these levels. The information in this video is in accordance with the terms and conditions, risk disclosure, disclaimer of justfintech.com. Let's have a look what SGX is doing. It's trading at 8280, up 19.70 points from previous close. We'll go ahead with having a look at the Nifty charts. So what happened yesterday is we have got a freak high of 8723.85, which actually spoiled this chart. And I was looking at the value area, the developing value area, and it was on the top part, not even came down till almost 20-25 minutes. It was the value area was even above the actual price where we were trading. So what I did is shifted to the November contract to just see what has happened there. And actually on the November contract we had a open is equal to low, and we broke the open is equal to low and started trading below that. While seeing the November contract, what I noticed in Banknifty is there was a freak trade on 8th October in Banknifty where it had given a freak low. So now there are many guesses around that whenever there is a freak high or low that is visited sometime. So if we see that freak low in Bank Nifty, then that will be visited sometime on the lower side. And if we see this freak high on Nifty, then it will be visited on the higher side. So in fact, all those assumptions may work, may not work. So we should not get into that and just do what the auction is doing in the current scenario. So let's have a look what happened later. So here, if we can see, we traded most of the day below the previous day's value area low. And even any after breaking the initial balance low, we got one push above that, but that was rejected. We can see this very long tail inverted hammer on the 3-minute chart, and the VWAP also crossed below the IB low, and finally we closed down at the lows of the day. And if you can see this black band is the previous week's value. So we actually went into the previous week's value, and previous week's value area low is somewhere around 8230. So today I think that should act as a important reference level. And yesterday I was showing this that the hypos of yesterday went for a toss for as we had this freak high, and what I was expecting because SGX was trading at 8398 at that time, and I was expecting a open around that. So we got a open which was actually 8400, but the first legitimate trade which happened was 8339.75 actually. So the hypothesis that I had done in the video yesterday, that if we open there and try to push up or find sellers there and then push back down towards 8340 and then below 8340 start going down. That actually didn't happen, and what happened is we started trading below 8340 directly and then started pushing down. So the anticipation that we'll get a trending move and at least come out of this expanding balance did not work, and we are again within this expanding balance, and again the reference levels that we have on the longer term chart for this balance will come into play. We'll go through that in a bit. Before that, let me go through the bank nifty. So Bank Nifty had a open auction out of range and out of value, and Bank Nifty also started pushing down. Though it broke the IB low at around 11 and again pushed back in, and then again it failed to auction above the previous day's VWAP. A very long-tailed inverted hammer here on 3 minutes. A lot of selling visible at the previous day's VWAP, and then again pushed down to close near day's low. And Bank Nifty has already pushed down below the previous week's value, so it's comparatively weaker than the Nifty. And as I discussed yesterday, it's a expiry week. We have a expiry on Thursday, and there will be rollovers going on into the November contract, and the institutions adjust their positions, what they want to carry forward and what they want to liquidate. So we can witness volatility even today till Thursday. I prefer not to make assumptions just for the expiry, because there's always, when you see on the social media people playing for uh, naked option trades, just in anticipation that what if we get a very good trending move either side, uh, and it works out and pays off well. But that doesn't happen always, and after all we are risking our capital, so we should be visualizing a very good risk reward ratio, and also if it fits all our criteria to enter a trade, then there's no problem in even entering a naked option trade. But if our conditions are not satisfied, and if we are not getting a proper trade, then better to trade normally. Expiry day will come and go. If someone feels uncomfortable trading during the expiry, one should avoid it. Not a compulsion to trade every day, but the protection of capital is a must, because if we have capital protected, there is always another day to trade. So let me go through the long term Nifty chart. So here this level again, the level of 8398 that I had marked and was showing yesterday. So we got that open at 8400, though there were not any trades till this 8340. So again a push below 8340 where we were on Friday, and then a push back into this. So this is this larger, the value of this larger balance, and we are still trading above it, and we are trading within the value of that gap of 21st August. So what was looking like a breakout has turned out to be a false breakout, a failed auction above those highs, and it gave a failure here and again pushed down below Friday's low and closed below that. So to confirm the auction failure on the daily time frame. And going ahead, again the same levels will come into play. So we have a LVN here at 8300, and then again a LVN here at 8330, and HVN and the composite volume POC of the entire volume value area at 8377. So again, those levels are going to come into play because we are trading within this range, and there is a important LVN down here at 8203. So any push below this zone, if we can see this HVN around 8238, any push below that will take us towards that LVN, and then we decide where we go, because we'll be entering this value, the longer term value of this balance. So, and there are a lot of supports stacked beneath. Any failure to hold these supports might again push down towards here. So in fact, we are again in this long term balance where the trades can be very choppy. It may again try to balance within that zone, and I'm still waiting for a breakout above or below this balance so that we can get a trending move in near future. Let's have a look at the Bank Nifty long term chart. No freak trades in Bank Nifty though, and again auction failure above this value. So this is the value area high of that 21st August, and there is no acceptance above that value. It had tried on 16th and 19th also to push above that, but could not stay there. And again, yesterday also it happened the same, that it could not stay above that value and pushed back in. If we can see, we again pushed below the value of 21st August and have entered this reference of the long term balance. We entered below that and closed just above the VH of this balance. So Bank Nifty, the level to watch will be somewhere. This is the congestion zone, if we can see, and then there is the POC of this balance. So around 17,750 levels. So any push below that can take us to the value area low, or initially the value area high of this balance, and then the value area low of this balance. We'll just go through the Renko chart of Nifty. So I have a very ugly pyramid on this Renko because it went up towards 872385 and again came back. So now like looks like the pyramid of Giza, and don't know if there are any ghost trading on NSE. But let's have a look at what happened after we started the actual trades. So here, if we can see a chop around this levels and a slide down, again a balance, and then again slide down, again a balance and slide down. This was the only up rotation which was equivalent to the initial fall. But apart from that, all the falls were bigger than the rises, and the rotations were quite smooth. So what I did is again just threw up a profile here of this balance to see if we can, because this was the place where it was looking that it can break out above the developing value, but that did not happen. So I was just looking if we can break out, or is it giving any indication to reject from there. And what happened is it tried to push above this value, this micro balance, but again pushed back very fiercely down and closed at the lows. So what we can expect today, the primary expectation will be to open within this value and open within the range, then try to push back above 8300, and if finds acceptance above that, then push towards 8340, and either get rejected there or chop in that range and then go above it. The second scenario is we open within value and then directly start pushing down towards this zone of this HVN of 8230 and then the LVN, and then start chopping there and look for acceptance there before making a further move. So again, on the long term, we are within the this. I'll just show that balance. So again, we are within this zone, and till we don't push below this, till we are not able to push within this and then give a sell off, we'll try to establish a larger balance within this zone, try to populate the whole area. Because last time when we went back up from that 7930 zone, it was a very swift move towards 8500, 8600 later on, and it spent very less time and very less volume was generated in this zone. So what the auction is trying to actually do is populate that whole area which was left unauctioned or was auctioned very thinly. And even if we fall below this, I don't think the fall will be very swift. It will be a very grindy fall, which will be chopping badly in that zone and trying to populate the whole area and then keep pushing down very slowly. So actually, a balanced market is good for a scalper. Mostly what it does is tries to fade the extremes on each day and then again try to fade the extremes on a larger balance. So the ideal trade is to go short at the extremes of the balance with a minimal stop loss, and again go long at the lower extreme of the balance with a very minimal stop loss for a mean reversion trade. Let's have a look at the Bank Nifty Renko chart. So Bank Nifty, after initially pushing down, we saw a chop here and then it pushed down and then again started chopping in a very narrow range. As we can see, a heap of support stacked beneath. And today, what we can expect is we open within the range, try to push towards 17,880 and 17,915 kind of zone, and then reject from there, come back towards 17,800 and then push below all these supports and test this VPOC near 17,660. On the other hand, we open within the range, try to auction within this range, chop around here, and then reject any down move and push back towards 17,900 and then break out above 17,900 and go towards the recent highs. Uh, it's very unlikely to do that because it is losing momentum. The moment it's going trying to go above 18,000, it is getting rejected. So ideally, what I would prefer is to break below this, test this VPOC, and then again push below that and auction around this area. So it's comparatively weaker to Nifty, and that is what I'm anticipating. The hypothesis which I'm anticipating is what I'm just showing. It is not necessary that the market does that, and in fact, I had got few queries that I'm posting this video, and do I also trade exactly on these levels? Yes, I use the same levels for reference, not exactly trade these levels because I've always been discussing that I use a 160 tick Renko chart also for intraday and use a volume spread analysis combined with it. And what I do for my personal trades is try to be a bit conservative, see for a rejection at important levels, and then enter on confirmation, take off 16 points, and then either ride the trade in the side of the trend, or just exit it and not carry it forward. But yes, the query that came in, that do I use the same levels? Then yes, I use the same levels. It is nothing magical that I use apart from this, and it works for me and should work for everyone who follows market profile or auction market theory, or volume profile. All are the volume profile, market profile, order flow, all are the branches of the same tree, and whatever one follows with conviction and with a bit of practice is going to work. So actually, the question in another mail was that if it works, why am I just posting videos and letting this secret out? There is no such secret. Of course, I have some proprietary indicators which I don't disclose, but that doesn't mean that those who don't have proprietary indicators, or those who don't have any custom made indicators, can't follow these levels. But because these are the normal levels, the normal market profile and volume profile levels, which everyone would get on their charts, and those levels definitely work if followed, and with some practice, and by watching every day uh, which levels hit most of the time, and which levels stay clean, or stay non-auction most of the time. So I think that that solves the query of the people who had mailed, and they are the daily viewers actually. So I'm happy that they ask questions and are watching the videos daily, and hope you are benefiting from these videos. Do post a feedback in the comment section if you like it. Even negative feedbacks are welcome if there is something which I can improve. And also, in 2016 somewhere, in May, we are going to do the Traders Carnival in most probably in Bangkok. The venue is going to be finalized shortly, and the moment of excitement for me is that in fact, I had lost hopes on me learning technical analysis, and it was after going through James Dalton's videos that I thought that, yeah, because I had learned market profile the wrong way, and then finally went through all his videos, went through mind over markets, and got a new perspective of trading market profile. And James Dalton will be coming for TC 2016, and that's a dream moment for me, because it is because of James Dalton that I again established that thought of going into trading and learning it fully and continuing with market profile. So there were many queries, personal messages on that who is superior, James Dalton or Peter Stelmeier. So it's not a matter of superiority. Peter will always stay as the inventor of this theory, and James Dalton just carried on with the legacy of MP. And it's a personal choice. Uh, if we go through Peter's write up, they are also very good, very precise, up to the mark. And it is just that we happen to contact James Dalton and he's coming. So uh, those who want to take that opportunity to meet him in person and listen to that master who will share his strategies, and also trying to convince him to do a, a separate workshop for guys who are really advanced in MP, and the guys who are interested in learning the advanced techniques, how to exactly point out the rejections and acceptance zones. So hopefully we'll have a agenda shortly, and announce that once that is out, and it will be quite fun because this time it will be a 4-day residential event, and hopefully everyone will be able to take the advantage of it. And uh, please don't misunderstand. This is not any advertisement or any sort of promotion which I am doing for anyone. This is just that let everyone know from where I learned and how I benefited, and everyone has that chance to take the benefit of a person who actually knows the in and outs of market profile, and everyone can take the advantage of it. So it's not a compulsion. Again, whoever wants to take the advantage can take the advantage, and I think that's all from me for today. And have a great trading day ahead.